Let's talk about the Mar-a-Lago Accord in this two-part series. First, let us explore what is the Mar-a-Lago Accord and why is it so controversial. The term itself carries a strong vibe of conspiracy theories involving Freemasons, Illuminati, and Jews secretly plotting to control the world, doesn't it? Initially, mainstream media dismissed it outright, but no one expected that after Trump took office, his policies would almost perfectly follow this script. Now, people have to take this mysterious accord seriously. What if? Just what if it's real? At its core, the Mar-a-Lago Accord proposes that central banks around the world must exchange their holdings of 10-year US Treasury bonds for 100-year bonds, referred to as century bonds. These century bonds may be issued at a discount but pay zero interest. That's right, zero interest. Moreover, unlike existing treasuries, these bonds cannot be traded on international markets. Some call this the new Bretton Woods system version 2.0. Simply put it, this is nothing less than a confiscation of all US debt held by foreign nations, a blatant robbery. Any country refusing to hand over its treasuries will face steep tariffs and be excluded from the American market. If a country or region attempts to bear the high tariffs without surrendering its bonds, for example, the EU, the US will withdraw its security guarantees and allow Russia to invade Ukraine. Perhaps Europeans don't understand why Trump favors Russia so much, but those of us who grew up reading Romance of the Three Kingdoms surely do. Isn't this exactly nurturing bandits to maintain power? Trump needs Russia, the crazy enforcer, to force Europe into signing the Mar-a-Lago Accord. Russia and China have no fundamental national conflicts. Uniting with Russia against China is impossible. Trump wants to ally with Russia against Europe. When J.D. Vance first visited Europe, he didn't condemn Russia, but instead heavily criticized European countries when Europe refused to comply. Trump attempted to militarily annex Greenland, directly flanking Europe alongside Russia and cutting off its lifeline. Now Zelensky is even asking Trump for Patriot missiles, truly seeking skin from a tiger. Tariffs and security protection are the two main weapons of the Mar-a-Lago Accord. So how does the US threaten a country like China, which doesn't rely on US security? Publicly available documents of the Mar-a-Lago Accord don't mention China yet. But if China refuses to comply, Trump might make a huge move in recognizing Taiwan. Why is the Green Party now selling TSMC to please Trump with all its might? Is it possible that the party leadership knows something ordinary Taiwanese citizens don't? Before becoming president, Trump launched a cryptocurrency. Doesn't that seem strange? In some ways, digital currency is a substitute for gold. If one day the global monetary system collapses due to it, Trump's own dollar assets might also go down with it. This meme coin could well become his future political war chest. Stephen Rand has a very subjective macroeconomic assumption. He believes that all the difficulties facing US manufacturing stem from an overly strong dollar. He argues that while the dollar provides trade settlement convenience globally, the US alone bears the burden of its appreciation, hurting exports. According to Miran's plan under the Mar-a-Lago Accord, the US will establish a sovereign fund to intervene in exchange rates, selling dollars to sharply devalue the currency and revive manufacturing. This fund was actually established on the 3rd of February this year. Although all information about it remains shrouded in mystery, some speculate the fund's money will come from tariffs, meaning foreign governments will foot the bill for US currency manipulation. This time, the US tries to manipulate the exchange rate differently from the Plaza Accord era. Back then, although the dollar depreciated significantly, US debt was only 40% of GDP. Now it exceeds 100%. And back then, US manufacturing was far stronger than today. So the depreciation after the Plaza Accord didn't cause major damage. After the Plaza Accord came globalization, where global trade as a percentage of GDP surged from 20 to 50%. During globalization, the US used debt to drive the internet revolution, occupying the top of the global supply chain. Globalization meant more dollars were needed for trade settlements. After hitting rock bottom in 1995, the dollar quickly rebounded. Now, the situation is completely different. Trump wants to sharply devalue the dollar while dismantling the existing international trade system to bring manufacturing back to the US. If factories worldwide relocate to America, globalization will regress dramatically. No one will need so many dollars for trade anymore. Add in a sharp fall in the dollar's value, and everyone will flee dollar assets, crashing Wall Street's stock, bond, and Forex markets. The triple sell-off in early April was just a preview. Earlier, we mentioned a contradiction the US now faces. Miran believes reviving US manufacturing requires a weak dollar, but the current federal debt ratio is way higher than during the Plaza Accord era. Today's US is like a 200-pound man, suddenly forced to carry a 200-pound pole for 10 miles. US financial markets would die instantly. A 400-pound load rolling downhill isn't a joke. What about 401k pensions? They'd vanish overnight. Republicans wouldn't even survive until midterm elections. They'd self-destruct immediately. So Trump's new chief economic advisor, Stephen Moran, came up with a brilliant trick. Confiscate everyone's treasuries, lock the doors, and beat the dogs inside. Why say confiscate rather than freeze? Because these bonds pay zero interest. Over 100 years, inflation would erode the principal nearly to nothing. Even harsher, after locking the doors, the US might use the IEPA, International Emergency Economic Powers Act, to charge management fees on the Century bonds, 1 to 2% annually. That turns zero interest bonds into negative interest ones. If the US charges 1 to 2% annually, many countries might just give up. Better to hand them over than keep losing money. 2% annually, multiplied by 50 years, equals 100% your entire investment gone by year 50. Recently, Trump called a halt to the trade war. Some media speculated it might relate to a 40 basis point surge in US Treasury yields within a week. Perhaps a sovereign fund already started dumping bonds early. As of January 2025, China holds $760.8 billion in treasuries. Its white gloves in Belgium and Luxembourg indirectly hold another $700 billion, totaling $1.4 to $1.5 trillion. Japan holds $1.08 trillion. Many claim Japan is the largest holder. That's wrong, but China has always held the most. Why is China responding so strongly to US tariff threats? Even Japan, essentially America's 51st state, refused to yield on the 15th of April. That's suspicious. Could it be that the Japanese finance minister realized that seizing Japan's trillion-dollar treasuries might cost more than simply paying 24% tariffs? Foreigners currently hold 25% of US treasuries. Confiscating that portion would significantly ease the US fiscal deficit, effectively wiping out 25% of total debt. Annual interest costs would drop sharply. The remaining 75% held domestically would stay within the US. Domestic debt can be handled similarly to Japan's model. The entire Mar-a-Lago Accord is a logically consistent 3-in-1 plan simultaneously, solving three major problems: manufacturing repatriation, US trade deficits, and US fiscal deficits. But the price of logical consistency is that the accumulated wealth of major countries, especially China, Japan, and South Korea, over decades could vanish overnight. It's like a village-level version of the Asian financial crisis. Southeast Asia was waiting to absorb China's industrial capacity to complete its own industrialization. This would send Vietnam back to an agrarian society. The core idea of the Mar-a-Lago Accord originally came from a well-known Wall Street analyst, Zoltan Posar. Later, Miran systematically laid out the theory of confiscating treasuries in a November report titled User Guide to Reshaping the Global Trade System. In this report, tariff wars are just the appetizer. The real blow comes from the currency war orchestrated by Trump's economic team, in particular, Stephen Moran, which we will talk about in the next video.